The crypto markets are bleeding. We have a lot to discuss, very important information to cover, so make sure to stick around until the end of this video. Like the video, but more importantly, definitely share this with your friends. Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. We have finally experienced the first major crypto crash of 2021. Actually, this is the first crash that we have had in crypto in months. Every time over the last few months there was a dip, it was very small. It was 1 hour and it quickly rebounded. Finally, in 2021, we have a crash that has sustained and has been lasting for more than 2 days now. And this should not be shocking to anyone. If you have been following this channel, if you are subscribed, have the bell notification on, I speak about this often, how the crypto markets are very volatile. And just a week ago, I was speaking about how when you go ahead and you buy crypto or you buy Bitcoin, assume mentally that your crypto has already lost 30% of its value. I'm not shilling my channel here, but I'm serious. You should be subscribed to my channel. You should be following other channels so that when these drops happen, you understand that they were expected. This is actually a pullback that was needed. And as crazy as that sounds, I'm going to explain to you why. I want to show you this chart right here. Credit to Dan Held. This is a chart from the bull market of 2017 when Bitcoin went from $1,000 to $20,000, 20 times in 1 year. And if we look at that chart, there were multiple pullbacks, very big, 38%, 38%, 33, 38, 36, 29. We're starting off 2021 with a 25, 30% dip, and everyone is panicking. And again, we're having the news articles coming out that Bitcoin is dead. And if you head over to 99bitcoins.com, you can check out the famous Bitcoin obituaries, where we can see that Bitcoin has died 394 times, according to the mass media. And you go through, you see all these stories. Bitcoin is dying, it's dying, and everything, like always, it goes down, people accumulate, the markets go back up, and we repeat this cycle over and over. And for people that have been studying the crypto markets, for people that have been in these markets for a long time, this is just becoming a game at this point. So when we look at the Bitcoin chart, the reason why this pullback was needed, because Bitcoin has just been soaring straight up and there is no support. If we look at the 100-day moving average, it's just at about $19,000. And if we look at the 200-day moving average, it's at about $14,000. We are way overbought, and this is seen in the RSI level. Right over here, when you're checking the RSI, if it's over 70, this means that the market is overbought. And as you can see, we have clearly been overbought in the month of December, and finally we're coming back to normal levels. What happens is when a market moves too quick, there is going to be euphoria. We're going to reach euphoria. Everyone thinks they're going to win and everyone thinks they're going to make money. But this is impossible. This does not exist in any market. In the end of the day, the people that did their homework, or the people with experience, they win, and the people that did not do their homework, they lose. When we check out this Wall Street psychology cheat sheet, we can see the stages of markets. We have hope, optimism, belief, thrill, euphoria, and then the crash. Euphoria is a level where everyone thinks they're going to win. 99.9% of people are up. Everyone's buying, your grandmother, your grandfather, everyone's winning. But this is not possible. And this is why these dips are needed. We need support levels in order to prevent ourselves from moving to euphoria too quickly. And the way Bitcoin has been moving over the last 3 months, we were on our way to euphoria. And we were going to get there quick. And once we hit the euphoria level, likely the bull market is over and we go back into the bear market. Right now, we're somewhere around the optimism or belief stage. And right now, the weekends have been shaken out. Luckily, we have slowed down. Ideally, we can maintain in this range from 30,000 to 35,000 for a couple weeks. I hope that happens, but it might not. The truth is, Bitcoin can still go down even more from this level. And that's definitely a possibility. So when you enter crypto, as I said in my previous videos, and I can probably make a whole channel just saying the same thing over and over and over, because I started to realize that no matter how many times I repeat it or other people still don't understand what this market is all about. When you go into Bitcoin, you need to be mentally prepared because these crashes will happen as they have happened in the past. If you think this is the only crash that's going to happen in crypto, and it gave you a lot of anxiety, I'm sorry to say, but it's probably going to get even worse, and it's going to be more just anxiety and panic for you. There's going to be crashes again, and again, and again. It's always going to happen in these markets, especially in crypto. And with Bitcoin, because it is so volatile, and even though I've been studying these markets for years and I think that I know about the markets, I cannot time these markets. So what I do is I dollar cost average. And in the process, I'm always buying the dip. We always have the idea that we're going to buy the dip, we're in it for the long run, and it's much easier said than done. So I don't actually purposely buy the dip. I dollar cost average. I buy small amounts of crypto very often. And in that process, in the end, I just end up buying the dip. And this is what I've been doing for years, and it's what I continue to do. Yesterday, 2 days ago, when I saw the Bitcoin markets crash, Ethereum as well, two of my favorite cryptocurrencies, what did I do? What I always do. I bought a little bit amount of Bitcoin, a little bit amount of Ethereum, and I moved on. And I want to show you the power of dollar cost averaging. And I want to clarify that dollar cost averaging only works when the asset in question will be worth more at a future date. So for example, if a person believes that Bitcoin will be worth more in 5 years than it is today, if you dollar cost average over time, you will likely be in profit. And on the opposite end, if a person thinks that Bitcoin will be worth less than in 5 years than it is today, over time, even though you're buying small amounts, you likely will be at a loss. However, there are cases, especially in crypto, because it's so volatile, that a person dollar cost averaging can still be in profit even if the asset in question is at a lower price than the day that they bought it. This is true for Bitcoin. People that were buying Bitcoin at the all-time high in 2017 at 20K, they were at profit already if they were dollar cost averaging already when Bitcoin was back at around 10K. But now that Bitcoin has reached its all-time high again of 20K and gone right above that, everyone that's been dollar cost averaging into Bitcoin is in profit. But I want to show you a more extreme case with Ethereum, which had a high of $1,400 in 2018, and it still has not reached that all-time high. Yet people that have been dollar cost averaging into Ethereum from its all-time high are still in profit. They were even in profit when Ethereum was trading at $700. I want to show you a clip from a video I made in the past. Let's say I want to use the most extreme example. You wanted to buy Ethereum at its all-time high of $1,400 on January 13th, 2018. And you had $20,000 and you said, I'm going to buy Ethereum, see what happens. Today, you would be down $9,508 or 47%. But instead, if you took that $20,000, even at the all-time high for Ethereum, again, I'm using the most extreme case here, and you said, you know what, I'm just gonna break it down and buy a certain amount weekly, $130 weekly, and even using a Coinbase fee of 0.5 higher than the other exchanges, today, you would be up $44,000, up 221%. No one can time the future. Yes, if you make small bets, you might miss out on the big gains, but the purpose of dollar cost averaging is to protect the consumer. As you can see, dollar cost averaging is very powerful. And I've had a lot of friends and family texting me recently asking, should I buy Bitcoin? Should I get in? And it's not a general answer. I ask each of them about their specific situation. And in the end, for most of them, I say, no, it's probably not a good idea. So even when you tell them the concept of dollar cost averaging and in it for the long term, they say, I'm going to buy the dip, I'm in it for the long term. But when the dip comes, we all know what happens. They don't buy the dip. Instead, they buy high and they sell low and they're at a loss. So in terms of dollar cost averaging, it really only makes sense if a person is doing this with an exchange that has very low fees. Gemini and Coinbase are very easy to use, but the fees are too high. If you are buying 10, 20, 30, whatever it is, even $100 a day, $1,000 a day, and you're paying high fees each time, it's not going to be great for your dollar cost average strategy. Instead, go to an exchange with cheaper fees. I have been using Voyager recently. I really love this platform. Commission-free trading, and the crypto that is held in my account, it's earning interest, not locked up. So I'm a big fan of Voyager. I have told a lot of my friends and family about this application. And then also other exchanges that are very good in terms of the fees are Binance and Kraken. right? So when the time comes to buy the dip, it's pretty simple. The people that studied Bitcoin, that study Ethereum, that know the crypto markets, they're going to buy the dip, and the people that don't won't buy it. And I want to clarify that just because something decreases in price or crashes, there's a dip, it does not mean it's a buying opportunity. If the asset in question is just not a good asset, it doesn't matter if you're breaking up your buying into $10 every day instead of a lump sum. In the end of the day, if the asset in question is not of value, all you're going to be doing is dollar cost averaging on the road to zero. So make sure you do your homework. That's the most important thing. No one is going to tell you what to do, because as much as they tell you what you should do or give you advice, unless the person themselves actually does the homework, when the time comes to dollar cost average or buy the dip, they're just not going to do it if they don't understand what's actually going on. Like the video, share this with your friends, subscribe to the channel. Thank you for listening, and I'll see you next time.